Hello everyone, welcome back to StockNation. Today we're going to discuss some powerful strategies for growing your wealth in the stock market. If you are just starting out to or looking to improve your strategy, this video is for you. We'll talk about the benefits of starting early, the power of compound interest, and how dollar cost averaging can work for you, and risk management and more. So along the way, I'll be showing you guys some great tools like the stock market heat map, the compound interest calculator, and the fear and greed index. And I'll also share a quote from Warren Buffett on long-term investing. So let's get right into it and let's not waste any time. So Let's start by talking about the biggest advantage you can give yourself as an investor. Starting early. The earlier you begin, the more time your money has to grow. It sounds simple, but it's powerful and really meaningful if you think about it. And starting early means you're able to take advantage of long-term trends in the market and weather the ups and downs without being caught off guard. Let me show you something on this stock market heat map. As you can see, the heat map shows how different sectors of the market are performing. The market constantly moves, and when you invest early, you can give yourself a chance to ride out market cycles. The market will always have volatility, but the longer you are in the game, the more likely your investments will recover and grow. Patience is key in this game, and starting early is the first step. So, so let me show you something about the compound interest for long-term investment. So looking here, this is the magic behind growing your wealth over time. It's called compound interest. Is and it's a process where your investment earns interest, and then that interest also earns interest. And the longer you let it grow, the more your money multiplies. Let me show you a practical example with a compound interest calculator. So in this scenario, we see the initial investment is $27,000, and the initial contribution is $7,500. And the interest rate is 12.5% compounded daily. The investment length is 5 years, and the end of the 5 years, you'll have an ending balance of $105,000, and the interest earned is $41,000, with $23,000 coming from the initial investment, and the remaining $17,000 coming from contribution. So this show clearly shows the power of compound interest is incredible. Even if you stop adding more money, the interest you earn starts earning its own interest. That's why the earlier you start, the more your money grows without you needing to do anything. So let's break this down even further. With a quick visual, as you can see, 26% of the final amount came from the initial investment. And by the way, I'm looking at the pie chart right now. So 35% came from contribution, and 39% was earned as interest, which is the power of compounding and work. So it's incredible how interest accumulates over time. And remember, this calculation assumes a 12.5% annual return, which, which is optimistic but is achievable with diversified portfolio over a long term. And SP 500 typically and historically and averagely returns around 12% each year. And it always continues to rise. So just keep that in mind. So I have it kept at 12.5%, as optimistic as I am, just to show you guys the annual returns and how much you would earn on average starting now. Anyways, moving on to the fear and greed index, we see that we are still in fear actually. However, the market can make us feel all kinds of things. But one of the most important aspects of investing is to not let your emotions drive your decisions. This is where the fear and greed index comes into play, which you can see in the screen. We are still in the fear zone, and this is what we use to measure the market sentiment. And it's a good reminder that emotions can cloud your judgment. When the market is overly greedy, it can lead to overvalued stocks and risky investments. However, on the other hand, when there's fear, the market can become oversold, creating buying opportunities for investors. This is where Warren Buffett wisdom comes in when he says, "Be fearful when others are greedy, and greedy when others are fearful." This means that when everyone is excited and buying into a stock, it's often a time to step back and reassess. Conversely, when the market is down, there's a lot of fear. It might be time to buy it. This is why it's so important to have a strategy and stick to it regardless of short-term emotions. And this is why I always explain to you guys about dollar cost averaging, also known as DCA, and risk management. This is where it comes into play. So, dollar cost averaging is a strategy that involves investing a fixed amount of money at regular intervals, no matter the market conditions. The beauty of DCA, also known as dollar cost averaging, is that it removes the guesswork. If the market is down, your money buys more shares. If the market is up, you buy fewer shares. Over time, this can lower your average cost per share and smooth out the impact of volatility. Here's the thing. Here's the thing. Risk management is also an important as potential for growth. Also, always ensure that you're diversifying your investments and not putting all your eggs in one basket, and balancing risk with reward. For example, you might invest into a mix of stocks, bonds, real estate, or use low-cost index funds for broader market exposure. The key takeaway is that there's no one-size-fits-all strategy, but consistency and a level-headed approach will serve you well in the long run. So to summarize, you have to start early so your money has time to grow. Take advantage of compound interest, which can turn small investments into large ones over time. Use strategies like dollar cost averaging to avoid emotional investing, so you don't just try to time the market and panic sell. And don't forget to manage your risk through diversification, such as ETFs, and staying focused on long-term goals. Investing is like a marathon, not a sprint. So whether the market is up or down, stick to your plan and let the power of compounding work for you. So thank you guys so much for watching. If you found this video helpful, please make sure to like, subscribe, and share with someone who could benefit from these tips. Until next time, this is StockNation, and we'll see you guys in the next video.